Hello everyone. Let's start with the second part of this chapter, Introduction to Accounting. As the last topic was left, basic terms in accounting. This was left to cover. So in this video, we are going to cover basic terms in accounting. So let's start. So let's start with the terms, which is like commonly used in accounting. You will find it everywhere. So the first is entity. Does it mean? Entity means a business. Business like a definite individual existence that you can see if in any paper or anywhere where the company name is written, there will be the seal, also the common seal, the stamp like that, where the company's name is written over there, and that gives the individual existence to the business. That is legally a separate person. It is treated as a person, the business, like that. So anything like supermarket, super bazaar, hajwas, these all are the examples. Like we can see any business which is identifiable as a individual existence legally. So that comes on the entity. And then transaction, anything where the value is involved while exchanging of goods and services between two or more entities. Some values involved, if we are buying something, purchase of goods, or if we have purchased goods on credit, then also it's a transaction. So a transaction can be both cash transaction also as well as credit transaction as well, where we are buying goods on credit, but we will pay them later. So that transaction is there. So in spite that we are not paying them right now, but that transaction is happening, so that will come under transaction. And then assets means like anything which can be expressed in the monetary terms, and that are the economic resources of an enterprise. We can say that, see, for example, it's given Super Bazaar owns a fleet of trucks which is used by it for delivering for the staffs. Trucks thus provide economic benefit to the enterprise. So it will come into the in the balance sheet in the asset side of balance sheet of Super Bazaar. If we are making it, then it will come into the asset side. So here, what assets means is um, which is helping in the business, and which are economic resources of the business. And So these all things come under assets. So for example, when we will be making balance sheet, now we will have like two columns. There is one assets and there is one liabilities. Two columns are there. In assets, we will see current assets as well as non-current assets. There are different in liabilities also we will see current liabilities and non-current liabilities. Like we will go deep into it. For now, you can just um, see that assets are that which are used by the business and its operations day to day. So those all things. Okay, so now we have liabilities. Liabilities are all types of debts or obligations that enterprise or business entity has to pay in the future. So these are the liabilities. And what is capital? Capital is anything in the form of cash or assets which are invested, any amount which is invested by the owner of the company or the business, that is known as capital. So it comes under the liability side of the balance sheet, because for the business, like we are taking something from the owner. So this is the liability for the company or the business. So it will come under the liability side of the balance sheet. on now sales. Sales are what? It is the total revenue that is incurred from the selling of goods or services. Sales can also be of two types, cash sales as well as the credit sales. Credit sales means like anything which we have sold but we have not got the money just right now, but we will get it in the future. So that is the credit sale made. And the person to whom we are making the credit sales, you know what they are known as? They are known as debtors. Debtors are the person from whom we will get the money in future because we have made sales to them on credit. So here we have learned both the terms, sales and debtors. But we will see debtors what again later. Now let's look at revenue. What is revenue? Revenues are the amounts of the business earned by selling of its products and services, that's known as sales revenue. Okay. So and other items of revenue common to many business are commission, interest, dividends, royalties, rent received, etc. Revenue is also called income. So what is the difference between sales and revenue? The revenue is the broader term and sales is just a part of the revenue. Sales means only the revenues that are occurred by selling the goods or services. But what is revenue? Revenue is the combination of all things. Sales revenue as well, commission also, interest, dividends, royalties, or the rent received. These also comes under the revenue. Anything, any income which is occurred in the business will come under revenue. Now expenses. So expenses are anything which has incurred while in the process of earning revenue. Like the business is set up to like gain revenue, but for earning revenue, any process that any costs that we are incurring, that we are purchasing the raw materials, we are giving rent, we are like giving salaries, we are giving wages to the employees, and any any expense that has been occurred, it will come, any cost that is occurred, it will come under the expenses. Light and water, telephone, seat depreciation, these are the examples given here. Now expenditure. So what does expenditure mean? Expenditure means any liability that has incurred for some benefit, like if you are purchasing goods or purchase of machinery, purchase of furniture, etc. All these all are expenditure only. Yeah, but we can see that the expenditure is like divided into two types. One is revenue expenditure and the other is capital expenditure. So what does it mean? Revenue expenditure means like any expenditure that is exhausted within a year. Like in 1 year, if it's getting exhausted, that will come under the revenue expenditure. But what does a capital expenditure means? Anything for which the expenditure lasts more than a year will come under the capital expenditure. Like the machinery and furniture, like these all expenditure will come under the capital expenditure because it will obviously last for more than a year. Like machinery which we are purchasing, it will not like exhaust in a single year itself, but yeah, the purchase of goods, it will exhaust within a year. So this will come under revenue expenditure. So there are two terms in expenditure also, that's the revenue expenditure and capital expenditure, which you must be knowing. Now profit. The profit of revenues, the excess of revenues of a period over its related expenses during an accounting year is called profit. Profit increases the investment of the owners. So what does it mean? Anything which we are like gaining extra excess of revenues over a period of its expenditure. Like revenue minus expenses is known as profit. We already know this. No need to explain. I think this term is like commonly used and everyone knows this. Okay, And accounting also, it's the same. It's just the same. Now let's see gain. Gain means like any profit that has arise from the events or transactions, uh, that arises from events or transactions which are incidental to business, such as like if we have made sale of fixed assets. We are not saying sale of products or goods or services. We are saying sale of fixed assets like machine. If we are selling it, then anything, if we are getting something in return, extra return if we are getting, in spite of after like deducting the cost of that fixed asset, if we are getting something, that will come under the gain. Don't get like confused between the profit and gain, because see, profit comes under, like, profit is a broader term here, and the gain is just a part of the profit, which is like specifically for anything that we are getting from the events or transactions which are incidental to business, like sale. We have seen the sale of fixed assets, not goods or services, that will come under profit. But here, sale of fixed assets, that is gain. Or winning of a court case, anything extra from that like business with operations, all the operations which the business is anchoring, anything extra from that, if you are gaining something, that comes under gain. See, the appreciation, the value of an asset, generally we'll see that there is depreciation, but sometimes there can be appreciation also of the assets, so that will come under gain. Now loss. Loss is also like we can see if any fire accident has occurred, or anything like cash or goods stolen by the theft, that will all come under the loss. Now discount. So discount is the deduction the price of the goods sold, like when we are making sales, if we are like reducing some price for them, so that the customer will come again. If we are giving them discount, it's like that, no? It will build trust to the customer. It will, like, customer will be happy if they will get some discount. So discount is given to them sometimes. So this comes under the word discount. We will see the broader things as well there. Here is one more thing written: trade discount. Such discount is called trade discount. It is offered in two ways: offering deduction of agreed percentage of the list price at the time selling goods is one way of giving discount. Okay, such trade discount is called the trade discount. It is generally offered by manufacturers to wholesalers and by wholesalers to retailers. Okay. Now, the next term is voucher. What does it mean? The documentary evidence in support of a transaction is known as voucher. Like if we are purchasing something, we will have that bill, no? That will come under voucher. So all those like receipt, any receipt or anything where we are making payment and we are getting like uh, document or evidence, not document, but the, like, the paper which we are getting, that is come, that the receipt which we are getting is known as the voucher. Now goods, it refers to the products in which the business unit is dealing. For it's not the same for everyone. Like the furniture will come under the goods section to the furniture dealer, like the tables and chairs will come under the goods when it is the furniture dealer. But the same thing will not be treated as good, but rather it will be treated as an asset to the other business units. Are you able to make the difference? See, like the same thing will be treated somewhere as a good, or somewhere as a asset. If it is a furniture dealer specifically, then the same table and chair is the good for them, goods for them. Like they have to sell those things, so that is coming under the goods. But the same furniture or chair, if it is in the stationery shop, it will be treated as an asset. Yeah. Now drawings. So drawings means withdrawal of money or goods from by the owner from the business. Like see, we have learned earlier the word capital. What was the meaning of the term capital? Capital means the amount that the owner has brought to the business, that the owner has invested in the business. That amount is known as the capital. But when the same owner takes some amounts for his personal use from the business, then that will come under the drawings. Yeah, I know this is the new term that we are seeing. The word drawings. Drawings means anything for personal use. Any like an owner is taking out money or any goods for its own personal use, then it will come under drawings. So we see two new terms, the capital and the drawings. I know that there are more new terms, but these are like the specific ones, no? Yeah. Okay. Now let's see purchases. So purchases are total amount of goods procured by a business on credit and on cash for use or sale. So anything that we are purchasing for the use of the business or for selling it, that will come under purchase, or whether it is like on cash or credit, anything, or whether for selling it or whether for using it, everything will come under purchase. But yeah, see, on trading concern, purchases are made of merchandise for resale with or without processing. Like in trading concern, like it's not generally required that we, if we have purchased something, that we are going to process it and then make something else and then we will sell it. It may not be like that. It can be like we have purchased something and we will sell the same thing. In trading it is like that. But what it is in under manufacturing, we purchase raw material and then we convert it into the finished goods and then we sell it. So there's nothing more into it, but yeah, we have to know the term purchase mean is that, and it just comes under like anything, cash purchase, credit purchase, anything, and whether for selling it or whether for using it for its own, like whether using it in the own business, everything will come under purchase. Stock. The stock is the inventory, um, like the goods that we have purchased, all those inventories will come under the stock. See, in trading and manufacturing, here also there are, and this is given. In trading, the stock on hand is the amount of goods which are lying unsold as at the end of an accounting period. This is known as closing stock. Ending inventory. Closing stock means that whatever is left after the one whole financial year, one whole accounting year, what is left at the last, those are the closing stock for the business. But again, when the next year starts, those closing stocks is the same, but the name will be different. It will be opening stocks, because now the new year has come, and now the new that stock is for us, it will come under the opening stock now for the new year. But the same stock, when the business like while end of the financial year, it will known as the closing stock, if anything is left then. So yeah, see here it's written similarly, the opening stock is the amount of the stock in the at the beginning of the accounting period. Yeah, now I think that this is the last slide of this basic terms in accounting. and we have to see like more two words, and I think already I have dealt with this word while I was saying about the purchases and sales, but again then we will see this. If it's not clear, we will just see again this time as well. So let's see debtors. What debtors mean? Okay, we can read this as well, but I will tell you in the layman language for your understanding. First of all, debtors and creditors, what is the difference between both the terms? See, debtors are the person from whom we will get the money. We have made sales to them on credit. The credit sales, whatever we have made to the person, that person is known as debtors for the business, for the entity, because entity own the money, entity owe the amount to them. Now, who are creditors? Creditors are the persons uh, to whom, from whom we have purchased goods or services, anything, and we have to give money to them, but we didn't give the money at that time and we purchased it on credit, so that is creditors. To remember, you can just relate it like whenever you see credit sales, then debtors are there, and whenever you see credit purchase, then creditors are there. So like this you can remember this. So yeah, that's the end of the first chapter, introduction to accounting, and the last topic also we have covered, basic terms in accounting. So this was the end of the chapter. So yeah, thank you guys. Let's we will move towards the chapter 2 now. So in upcoming videos we will proceed further to the chapter 2. Stay tuned. Hope uh, i hope you guys are liking this video that are coming, and if anything that like any doubt or anything, whatever you feel like, you can share it in the comment section below, and we will try to like implement it, or we will try to enhance it, improve it, anything, whatever you feel, you can mention it in the comment section below, or any doubts that you guys are having, any doubt in term in the like any terms, or like any thing that you want me to make the video on, like any chapter or any topic related to accounting, or related to commerce, anything that ever you want, you can like mention it in the comment section below, and we'll try to make it. So thank you guys, see you soon.